China's historic trade surplus reaches $1 trillion. On January 16, 2025, the General Administration of Customs of China announced that the country achieved a remarkable trade surplus of nearly $1 trillion in the year 2024. This figure, specifically recorded at $990 billion, surpasses the previous record of $838 billion set in the year 2022, marking a significant milestone in global trade dynamics. China's exports for the year totaled approximately $3.58 trillion, while imports amounted to $2.59 trillion, resulting in a historic surplus that, when adjusted for inflation, exceeds any trade surplus recorded by any nation over the past century. Complex trade relations. Despite the impressive figures, the relationship between China and the United States remains complex. Notably, only about one-third of China's trade surplus is attributed to its trade with the U.S. Similarly, roughly one-third of the American trade deficit is linked to imports from China. This intricate economic interplay poses challenges for the incoming U.S. administration under President-elect Donald Trump, who has pledged to address America's trade deficit by imposing tariffs on imports, particularly from China. Experts caution that imposing tariffs solely on Chinese goods may not significantly reduce the overall U.S. trade deficit. Instead, it could potentially lead to increased imports from other countries, thereby exacerbating trade imbalances elsewhere. Countries that maintain trade surpluses with the U.S. often do so to finance their imports from China, further complicating the trade equation. Growing global tensions. China's massive trade surplus has not gone unnoticed, drawing criticism from various nations. Both developed and developing countries have begun to implement protectionist measures in response to the influx of low-priced Chinese goods. Tariffs have been raised by countries around the world, contributing to rising trade tensions and the potential for a broader trade conflict. The situation is exacerbated by China's dominant position in global manufacturing, particularly in sectors such as automobiles, electronics, and renewable energy technologies like solar panels. As China continues to expand its manufacturing capabilities, concerns are mounting regarding the impact on domestic economies in various countries. Many nations fear job losses in manufacturing sectors unable to compete with China's competitive pricing, prompting calls for protective measures. Domestic economic challenges. While China's trade surplus indicates robust export performance, it also masks underlying issues within the domestic economy. The country has been grappling with economic challenges stemming from a significant downturn in the real estate market, leading to reduced consumer spending. Many households have experienced wealth erosion, resulting in increased caution regarding both domestic and imported goods. This consumption decline has further implications for China's import demand, affecting trade dynamics. In contrast, the manufacturing sector remains resilient, supported by government initiatives like the Made in China 2025 policy, which aims to enhance self-sufficiency and technological advancement in key industries. This strategic push has enabled China to transition from being a major importer of manufactured goods to becoming a global leader in exports, particularly in advanced manufacturing. Global trade landscape. As of now, China accounts for approximately one-third of the world's manufactured goods output, surpassing the combined production of the US, Japan, Germany, South Korea, and the United Kingdom. The implications of this dominance extend beyond trade numbers. They influence global supply chains and market dynamics, posing challenges for other manufacturing-heavy economies. For instance, the European Union reported a trade deficit of $247 billion with China, while maintaining a surplus of $240 billion with the US. This indicates a complex interdependence where countries must navigate their trade balances carefully, often relying on exports to the US to finance imports from China. Future outlook. Looking ahead, the future of global trade dynamics remains uncertain. The incoming Trump administration's approach to tariffs and trade policy will significantly shape the landscape. While China has signaled a willingness to engage in dialogue and potential cooperation, The increasing protectionism from various countries could lead to further trade disputes. Experts suggest that a balanced approach is necessary to avoid a full-blown trade war. This includes fostering mutual investment opportunities and reducing barriers to trade while addressing legitimate concerns about unfair trade practices. The potential for increased tariffs and retaliatory measures looms large, necessitating careful navigation of diplomatic channels to maintain stability in global trade. In conclusion, China's historic trade surplus is a testament to its manufacturing prowess and global economic influence. However, it also underscores the intricate web of relationships between nations marked by challenges and opportunities that will dictate the course of international trade in the years to come. As the global economy continues to evolve, these dynamics will require close monitoring and strategic management to ensure a balanced and equitable trading environment. China's record trade surplus of nearly $1 trillion in 2024 raises several counterintuitive insights about global trade dynamics and domestic economic conditions. Here are some of the key counterintuitive points derived from the reports. 1. Trade surplus amid domestic economic weakness. While a trade surplus typically signals economic strength, China's surplus coincides with significant domestic economic challenges, particularly a housing market collapse that has led to a decline in consumer spending. This suggests that the trade surplus can mask underlying economic vulnerabilities rather than indicate overall economic health. 2. Misleading trade relationships. Only a third of China's surplus is with the United States, and similarly only a third of the U.S. trade deficit is with China. This means that while the U.S. focuses on China in trade discussions, the broader trade landscape is more complex, and tariffs imposed solely on Chinese goods may not significantly impact the overall U.S. trade deficit. 3. Global dependence on Chinese exports. Many countries, including those in Europe and developing regions, rely heavily on imports from China to balance their own trade deficits. This creates a paradox where raising tariffs on Chinese goods may lead to increased trade deficits with other countries as U.S. companies divert imports from China to other nations, potentially exacerbating the overall trade imbalance instead of reducing it. 4. Export growth outpacing global demand. China's exports grew by over 12% while global trade only increased by about 3%. This disproportionate growth indicates that China is cutting into the export sectors of other countries. This situation is unsustainable, as it suggests that China's export-driven growth strategy could eventually lead to retaliatory measures from other nations and heightened trade tensions. 5. Manufactured goods dominance. A staggering 98.9% of China's exports were manufactured goods, which raises questions about the sustainability of this model. Other countries are increasingly concerned about job losses in their manufacturing sectors due to uncompetitive pricing of Chinese goods, leading to potential trade wars and economic backlash. 6. Investment versus consumption. China's economic strategy has favored investment in manufacturing over domestic consumption. This is counterintuitive because a trade surplus driven by exports typically suggests a strong global demand for a country's goods, yet in China's case, it has led to an imbalance where domestic consumers are not benefiting from the economic growth associated with these exports. 7. Tariff responses in international relations. The anticipated tariff measures by the U.S. could provoke retaliatory actions not just from China but also from other nations that have developed trade surpluses with the U.S. This global interconnectedness suggests that trade policies aimed at one country can have far-reaching implications, complicating international relations and potentially destabilizing economies worldwide. 8. Changing economic priorities. The Chinese government faces a dilemma. To improve domestic consumption and living standards, it may need to reallocate resources away from military and state-owned enterprises to social safety nets and consumption incentives. This shift could run counter to the current focus on export-led growth and state control over the economy. 9. Rising tariff stakes. While the U.S. is considering broad tariffs to reduce trade deficits, the reality is that higher tariffs could increase prices for American consumers, potentially leading to pushback against protectionist policies. This highlights the tension between addressing trade imbalances and maintaining consumer access to affordable goods. 10. Dependence on foreign markets. China's reliance on exports for economic growth is counterintuitive when considering its large domestic market. Despite having a vast consumer base, the focus on exports raises questions about whether China is fully leveraging its domestic market potential to foster sustainable economic growth. These insights underscore the complexity of global trade and economic relationships. Challenging conventional narratives about trade surpluses and deficits. The interplay between domestic economic health and international trade dynamics remains a critical area for analysis as countries navigate the evolving landscape of global commerce. The report on China's trade surplus reaching nearly $1 trillion in 2024 encapsulates a range of critical elements that could easily be overlooked by the general public. While the sheer magnitude of the surplus is noteworthy, several nuanced aspects are significant in understanding the broader implications for global trade dynamics, economic policy, and geopolitical relations. 1. Complexity of trade relationships. One of the most overlooked insights is the complexity of China's trade relationships, particularly with the United States. Only a third of China's trade surplus is directly linked to the U.S., which complicates any straightforward narrative about U.S.-China trade tensions. This detail is significant because it illustrates that punitive tariffs imposed by the U.S. may not effectively address the overall trade deficit. Instead, they could inadvertently lead to increased imports from other countries as American companies seek alternative sources for goods. This ripple effect highlights the interconnectedness of global trade and suggests that unilateral actions can have unintended consequences. 2. Impact on domestic economy. The report notes that China's substantial trade surplus masks underlying domestic economic challenges, particularly a slowdown in consumer spending due to a housing market collapse. This juxtaposition is crucial as it indicates that while China may appear economically robust on the global stage, significant portions of its population are experiencing economic distress. This could lead to long-term implications for social stability and consumer behavior, which in turn could affect future trade dynamics. Understanding this dichotomy is essential for grasping the potential volatility in China's economic landscape. 3. Global trade imbalance. Another significant point is the global trade imbalance that China's trade surplus exacerbates. The report highlights how countries like the European Union and developing nations are structurally dependent on trading with China, often running deficits with it while maintaining surpluses with the United States. This dependency creates a precarious situation in which a shift in trade policy, such as increased tariffs, could destabilize economies that rely heavily on Chinese imports. Many developing countries find themselves in a cycle of borrowing to pay for imports from China, which could lead to long-term financial vulnerabilities. This systemic risk is often underappreciated in discussions about trade. 4. Manufactured goods dominance. The report mentions that 98.9% of China's exports are manufactured goods, a fact that underscores China's dominance in global manufacturing. This concentration presents both opportunities and risks. On one hand, it allows China to leverage its industrial capabilities, on the other, it makes the country vulnerable to global demand fluctuations. Additionally, as countries attempt to protect their domestic industries through tariffs, China's ability to maintain such a high level of exports could be challenged, leading to broader economic ramifications. 5. Policy implications for China and the U.S. The report indicates that the incoming U.S. administration's trade policies, particularly regarding tariffs, could have significant implications for both countries. As Trump prepares to take office with aggressive tariff plans, the report hints at a potential escalation in trade tensions. However, it also suggests that a more nuanced approach, such as increasing Chinese investment in the U.S., could address trade imbalances without resorting to tariffs. These policy considerations reveal the delicate balance that both nations must navigate in their economic interactions, which is often oversimplified in media narratives focused solely on deficits and surpluses. 6. Environmental and labor concerns. While the report does not delve deeply into this aspect, the implications of China's manufacturing supremacy raise questions about environmental sustainability and labor practices. As China continues to produce a significant percentage of the world's manufactured goods, the environmental impact of such production is a growing concern. Furthermore, labor practices in Chinese factories, including wage disparities and working conditions, often come under scrutiny, particularly as other nations seek to protect their industries. This interplay between trade environment and labor standards is crucial in the context of global trade discussions, but is often sidelined in favor of more immediate economic metrics. 7. Geopolitical ramifications. Finally, the geopolitical ramifications of China's trade surplus are significant yet frequently overlooked. The dominance of China in global manufacturing and trade has implications for international relations, particularly as countries like the US and EU grapple with how to respond to China's economic ascendance. The potential for trade wars, retaliatory tariffs, and shifts in alliances can reshape global power dynamics. Understanding these geopolitical undercurrents is essential for comprehensively analyzing the implications of China's trade surplus beyond mere economic statistics. In summary, while the headline figure of China's nearly $1 trillion trade surplus is striking, the intricacies of trade relationships, domestic economic challenges, global imbalances, policy implications, labor and environmental concerns, and geopolitical ramifications present a far more complex picture. These elements are crucial for understanding the broader implications of China's trade dynamics and the potential challenges and opportunities that lie ahead for both China and the global economy. 1. Historic trade surplus and global economic implications. China's trade surplus reaching nearly $1 trillion in 2024 signifies its dominant position in global trade. This historic figure, which surpasses any previous trade surplus recorded by any country in the last century when adjusted for inflation, highlights the extent of China's manufacturing prowess. The surplus has implications not just for China's economy but also for global trade dynamics, as it showcases the shift of manufacturing capabilities to China and raises concerns about the sustainability of such growth in the context of rising protectionism and potential trade conflicts, particularly with major economies like the United States. 2. Complex US-China trade relations. The intricate relationship between China's trade surplus and the U.S. trade deficit is critical for understanding the broader economic landscape. Notably, only a third of China's surplus is directly related to trade with the U.S., which complicates the narrative surrounding tariffs and trade policies. The potential implementation of tariffs by the incoming Trump administration could inadvertently increase trade deficits with other countries, as U.S. companies might turn to alternative suppliers to avoid high tariffs on Chinese goods. This complexity underscores the interconnected nature of global trade and the potential for unintended consequences from unilateral trade policies. 3. Impact of domestic economic challenges on trade. While China's trade surplus is a sign of its strong export sector, it also masks underlying domestic economic challenges, particularly a slowdown in consumption due to the bursting of the real estate bubble. Many Chinese households have lost wealth, leading to decreased domestic consumption and consequently reduced imports. This situation raises questions about the long-term sustainability of China's growth model, which heavily relies on exports. The tension between a thriving export sector and a struggling domestic economy could lead to further economic instability if not addressed effectively. 4. Emerging trade protectionism and geopolitical tensions. The rise of China's trade surplus has prompted a wave of protectionist measures from various countries, both developed and developing. The backlash against China's low-cost exports is evident as countries like the US and members of the EU have raised tariffs on Chinese goods. This trend not only threatens to escalate into a full-blown trade war but also highlights growing geopolitical tensions. As nations grapple with the implications of relying on Chinese manufacturing, the evolving landscape calls for a re-evaluation of international trade policies and strategies to balance domestic interests with global economic relations. 1. Germany's post-World War II economic boom 1945–1960s. After World War II, West Germany experienced a remarkable economic recovery known as the Wirtschaftswunder economic miracle. The country implemented policies that facilitated rapid industrial growth leading to significant trade surpluses. By the late 1950s and early 1960s, Germany emerged as a leading exporter of manufactured goods, particularly automobiles and machinery. This period was characterized by a strong export-oriented economy, much like China's recent trade surplus achievements, and it also faced pressure from other nations concerned about its economic dominance in Europe. 2. Japan's trade surplus in the 1980s. During the 1980s, Japan became the world's second-largest economy, driven by its export-led growth strategy. The country achieved significant trade surpluses, primarily in automobiles and electronics, which led to tensions with its trading partners, particularly the United States. The U.S. responded with tariffs and trade negotiations in an attempt to address the growing trade deficits, similar to the trade tensions seen today between the U.S. and China. Japan's economic policies during this time aimed at strengthening manufacturing and exports mirror some of China's current strategies. 3. The Plaza Accord 1985. In response to the growing trade deficits faced by the United States, a group of nations including Japan, West Germany, France and the UK signed the Plaza Accord in 1985. This agreement aimed to devalue the US dollar relative to other currencies to correct trade imbalances. The accord had significant implications for Japan, which faced pressure to reduce its trade surplus with the US. This historic agreement highlights the complexities of international trade relations and the measures countries may take to address trade imbalances, akin to the current discussions around US-China trade relations amid China's record trade surplus. Future outlook: predictions for China's trade surplus and global trade dynamics. China's trade surplus, reaching a historic nearly $1 trillion in 2024, is poised to have far-reaching implications for both its economy and global trade dynamics in the coming years. Here are several predictions about what we can expect in the future. 1. Sustained trade surplus growth. China's trade surplus is likely to continue growing in the short to medium term, driven by its robust manufacturing sector and ongoing global demand for its exports. As the country solidifies its position as the world's largest exporter, this surplus could further increase as China expands its markets, particularly in developing regions such as Africa and Southeast Asia, where demand for affordable manufactured goods remains high. 2. Increased protectionism and trade tensions. As China's trade surplus expands, we can expect a rise in protectionist measures globally. Countries facing increasing trade deficits with China may adopt stricter tariffs and trade barriers to protect their domestic industries. The incoming Trump administration's intentions to raise tariffs on Chinese goods will likely be a catalyst for retaliatory measures from China and may prompt other nations to follow suit, leading to heightened trade tensions and potentially a trade war. 3. Shifts in global supply chains. China's dominance in manufacturing could provoke nations to rethink their supply chains. Companies in the United States and Europe may start diversifying their supply sources to reduce dependency on China. Countries in Southeast Asia, India, and even Africa may benefit as they become alternative manufacturing hubs. This could lead to increased investment in these regions and a gradual shift in global production dynamics. 4. Focus on domestic consumption. In response to international pressures and to counterbalance the risks associated with heavy reliance on exports, China may pivot towards boosting domestic consumption. This shift would involve enhancing the social safety net, increasing household incomes, and encouraging consumer spending. If successful, this strategy could lead to a more balanced economy, reducing the trade surplus over time. 5. Technological and industrial advancements. China's continued investments in technology and infrastructure will likely enhance its competitive edge in high-value industries such as electric vehicles, renewable energy, and advanced manufacturing. As China focuses on moving up the value chain, we might see a transformation in its export profile with a greater emphasis on high-tech products and services, further complicating the trade landscape. 6. Impact on the U.S. trade deficit. The dynamics of China's trade surplus will have significant implications for the U.S. trade deficit. If tariffs are imposed solely on Chinese goods, it could lead to an increase in imports from other countries, worsening the overall trade balance for the U.S. This could create a complex situation where addressing the trade deficit becomes increasingly challenging, as the U.S. may find itself reliant on imports from multiple countries to satisfy consumer demand. 7. Environmental and labor standards pressure. As China continues to dominate global manufacturing, there will be increasing pressure from international stakeholders to improve labor practices and environmental standards in its manufacturing processes. This could lead to changes in how goods are produced in China, potentially increasing production costs and affecting the pricing of Chinese exports. 8. Geopolitical implications. China's expanding trade surplus and its responses to international trade tensions will have significant geopolitical implications. As countries engage in trade negotiations and alignments, we might see a reconfiguration of alliances based on trade dependencies. The Belt and Road Initiative could further China's influence in developing countries while also creating friction with nations like the U.S. that view this expansion as a threat to their own geopolitical interests. 9. Financial market repercussions. The sustained trade surplus could lead to increased foreign currency reserves for China, impacting global financial markets. This accumulation of reserves may provide China with greater leverage in international finance, allowing it to invest in foreign assets and influence global monetary policies. However, it may also raise concerns about currency manipulation and its impact on global economic stability. 10. Long-term economic adjustments. Ultimately, while short-term gains from the trade surplus are evident, China will need to navigate long-term economic adjustments. This includes addressing the internal challenges posed by an aging population, rising labor costs, and the need for innovation to maintain growth. If China can successfully transition to a consumption-driven economy, the trade surplus may stabilize at a more sustainable level, promoting balanced global trade relations. Conclusion. China's record trade surplus is not merely a reflection of its manufacturing prowess but also a harbinger of complex global trade dynamics. As the world responds to this imbalance, nations will need to carefully navigate their trade strategies, balancing protectionist desires with the realities of a deeply interconnected global economy. The coming years will be critical in shaping the future of international trade, with China at the center of this evolving narrative.